The Palm Springs real estate market is sending mixed signals. Sales are down 34.2% below normal levels, yet the luxury market is booming. What's really going on? Hi, Neal here, your Living in Palm Springs realtor. In this video, we'll be cutting through the confusion. We'll analyze the latest data from all the 9 cities of the Coachella Valley, giving you a clear picture of where the market stands post-election and where it's heading. Let's examine the surprising price trends across the Palm Springs 9 cities. The real estate landscape in this desert oasis is far from uniform, with each area telling its own unique story through the median home prices. At first glance, the numbers paint a picture of stark contrasts. While some cities are experiencing modest growth, others are seeing significant jumps in property values. This disparity is creating a complex market that demands a closer look. One Coachella Valley city in particular stands out from all the pack. This area has seen an astonishing 25% increase in median home prices over the past year. Such a dramatic rise raises questions about the factors driving this growth and what it means for potential buyers and sellers here in the region. To understand these variations, we need to consider several key elements. Location plays a crucial role, with areas closer to popular amenities or offering specific lifestyle benefits often commanding higher prices. The type and age of the houses in each city also influences median prices, as do local development initiatives. Sales volume and inventory levels provide additional context to these price trends. Some cities are experiencing a surge in demand, with homes flying off the market faster than they can be listed, while others are seeing a more balanced market with a healthy supply of homes available for interested buyers. In areas where inventory is particularly low, we're seeing increased competition among buyers, often leading to multiple offer situations and homes selling slightly above asking price. This scarcity is a significant factor in driving up prices in certain Coachella Valley cities. As we dig deeper into the data, one question looms large. Which city is behind this remarkable 25% price increase? Well, the answer might surprise you, as it's not necessarily the most well-known or traditionally popular area of Palm Springs. The city experiencing this unprecedented growth is La Quinta, known for its world-class golf courses and its stunning mountain views. La Quinta has become a hotspot for luxury buyers and those seeking high-end desert lifestyles. The influx of remote workers looking for spacious homes and outdoor amenities has further fueled demand in the area. Several factors have contributed to La Quinta's explosive growth. The city has seen significant investment in new developments and amenities, enhancing its appeal to both permanent residents and also to seasonal visitors. Its reputation as a golfer's paradise continues to draw enthusiasts from around the world, many of whom are choosing to make La Quinta their permanent or their second home. Currently, the price of an average-size home in Palm Springs is $1,128,999. Now that's down 8.7% from this time 1 year ago. The price for an average-size condo in Palm Springs is $435,244, and that's just 2.5% less than it was 1 year ago. Gains in average-size homes in the Coachella Valley cities range from 14.6% in Desert Hot Springs to minus 7.6% in Rancho Mirage. These dramatic price variations across the Palm Springs 9 cities are creating a complex landscape for both buyers and sellers. For buyers, it means carefully considering which areas offer the best value and align with their lifestyles and needs. Sellers, on the other hand, need to be aware of how the property's location might impact its market value and its selling potential. The recent presidential elections has sparked significant changes in the Palm Springs real estate market, defying historical patterns. Typically, elections bring a temporary slowdown in home sales due to buyer uncertainty. However, the current market is behaving quite differently from what we've seen in the previous election years. Historically, home sales would bounce back in December following an election and continue to rise into the next year. But this time, we're witnessing a more pronounced and more prolonged shift in buyer behavior. Many potential buyers in Palm Springs have adopted a wait-and-see approach, largely due to uncertainty surrounding interest rates and overall market conditions. This cautious stance has contributed to a notable decline in sales, with current levels being 33.5% below normal. One of the key factors influencing this market shift is the recent change in interest rates. As of October 2024, mortgage rates have climbed to approximately 7%, which significantly impact buyer purchasing power. To put this into perspective, consider a buyer looking to purchase a $500,000 home with a 20% down payment. The increase in interest rates would result in their monthly payment rising by $186. Now, this substantial change is causing many potential buyers to reassess their options and their purchasing strategies. The effect of these market changes are evident in the time houses are spending on the market. In the Coachella Valley, the median number of days on the market has increased to 46, which is now 9 days longer than it was a year ago. And this trend does indicate a shift towards longer selling times, bringing the market back closer to pre-pandemic levels. Despite these challenges, it's important to note that well-priced properties are still attracting home offers. A portion of homes continue to sell at or above list price, suggesting that there's still strong demand for desirable properties that are in prime locations. Looking ahead, experts predict that if mortgage rates decline as anticipated, we could see an increase in buyer activity. This potential shift could create more favorable conditions for both buyers and sellers, as lower rates generally stimulate demand and could lead to a more competitive market. The Federal Reserve's approach to interest rates will play a crucial role in shaping the market in the coming months. If rates are cut, it could trigger increased buyer activity and potentially drive up home prices higher as demand rises. As we navigate this evolving post-election landscape, it's clear that both buyers and sellers need to adopt their strategies. For buyers, understanding the impact of interest rates on the purchasing power and being prepared to act when opportunities arise will be key. Sellers, on the other hand, must be mindful of these changing dynamics and then adjust their expectations and pricing strategies accordingly. In a twist that's caught many experts off guard, luxury properties in Palm Springs are continuing to outperform the broader market. Half of all dollar sales now come from homes priced over $1 million. What's fueling this high-end surge? And what does it mean for buyers and sellers across all price points? The luxury real estate market in Palm Springs is showing remarkable strength, even as the overall market faces challenges. This segment has become a bright spot in an otherwise cooling off market, with homes priced over $1 million now accounting for 50% of all dollar sales here in the Coachella Valley as of October 2024. This trend stands in stark contrast to the general market slowdown, where sales have dropped significantly below normal levels. The performance of the luxury home market has sparked debate among real estate professionals. Some experts view this growth as a positive sign of market resilience, while others question its long-term sustainability. Those optimistic about the trend point to Palm Springs' unique appeal for high-end buyers, including its world-class golf courses, the spas, the cultural events. Skeptics, however, cite economic uncertainties and the rising interest rates as potential threats to its continued growth. Several factors are driving the demand for high-end properties in Palm Springs. The area has seen an influx of remote workers seeking spacious homes and outdoor amenities, a trend that's particularly benefited the luxury market. Additionally, many homes priced between $700,000 to $800,000 have now entered the $1 million category, contributing to the expansion of the luxury segment. Sales data reveals that properties priced over $2 million continue to perform well, making up a significant portion of our total sales volume here in the area. The resilience in the upper echelons of the market are noteworthy, especially given the broader economic context. The impact of the luxury market boom on the overall dollar volume in Palm Springs is substantial. However, it's important to note that while luxury sales are strong, they haven't fully offset the decline in unit sales. In October 2024, total dollars reached $357 million, which is actually 7.5% below the previous year's figures. This statistic highlights the complex nature of our current market, where the high-end value sales are occurring alongside a decrease in overall transaction volume. As we consider the future of the Palm Springs luxury market, clear that both opportunities and risks lie ahead. The ongoing uncertainties surrounding interest rates and economic conditions could potentially cool buyers' enthusiasm and lead to price adjustments. On the other hand, the unique lifestyle offerings of Palm Springs continues to attract affluent buyers, which could help sustain the luxury market's momentum. The Palm Springs real estate market is like a high-stakes chess game where every move counts. But what if the pieces on the board keep changing? Well, these conditions present unique challenges for both buyers and sellers. Buyers face reduced purchasing power and must navigate a market where some areas are seeing price increases while others are seeing declines. Sellers, on the other hand, need to adjust their expectations and strategies based on their specific location and their price range. Experts are divided on the best approach in this market. Some recommend aggressively pricing for sellers to attract buyers, while others suggest just holding firm on the prices, especially in areas that are experiencing growth. Each individual situation is different. For buyers, some experts advise waiting for interest rates to potentially decrease, while others emphasize the importance of acting now before prices go back up. As we look at successful tactics, it's clear that understanding local market dynamics is very crucial. Real estate conditions in Palm Springs are highly localized, meaning strategies that work in one city might not be effective in another. Sellers who price their homes correctly for their specific area and make strategic improvements are seeing better results. And for buyers, being prepared to act quickly when the right opportunity arises is also key. This means having financing in order, being clear about your must-haves versus nice-to-have, and staying informed about market trends is the most important thing you can do in your target area. The ongoing California insurance crisis also adds to another layer of complexity, making it essential for buyers to factor in the costs and the availability of homeowners insurance when considering properties. It's clear that both opportunities and challenges continue to lie ahead. The market's complexity is evident in the stark price variations across the 9 cities. Looking forward, experts predict a potential 4.6% average increase in home prices across the Palm Springs area. This forecast suggests opportunities for both buyers and sellers to act before prices potentially rise further. The luxury segment continues to show strength, with homes over $1 million accounting for half of all sales in the Coachella Valley. If you're thinking about buying or selling a home in the Palm Springs area, be sure to schedule a free, no-pressure or obligation Zoom call so we can help you navigate the Palm Springs real estate market. Click on the link in the description below. Now, watch this next video all about living here in Palm Springs.